Hello, this is Wendi Stott. I am a real estate agent here at our Keller Williams East Brainerd office, and I have all things mortgage that we want to talk about today. And I have my good friend Allison Mayne. She is with Southern Bancorp, and Allison has been doing financing and mortgages for some time now. And I just wanted to see if there's anything that we could put out there that would be educational and beneficial for you guys as consumers that have questions. So, Allison, one of the things that I kind of wanted to talk about, and everybody asks me as I'm out there in the world of real estate, it wasn't actually a question that I heard all the time years ago. Of course, I've been in real estate now 22 years, but it has been a topic of conversation a lot, I would say, in the past 2.5, 3 years. As we all know, we had rates that were like 2.5%, 3%, 4%.
Can we go back to that?
I don't think we'll ever see that again. I'm just going to be totally honest with you. That was a fluke. That was just one of the things. And I've been to Keller Williams functions and been with Gary Keller explaining, all the way from 1980s to today, that's not the norm.
No.
So we all know that was not the norm.
Absolutely not.
The norm is actually around 6 to 6.5 as you do an average from 1980s when it was 13, 14% up to 2025.
Yeah, you're right.
We are kind of like now in the norm. So I think the sticker shock is letting people kind of know that is the case.
Absolutely.
Yes. So anyway, so where do you see them headed, like within the next 6 to 12 months? If you had a little crystal ball here, but you being a mortgage expert, where do you see those heading as far as the rates?
If I had a little crystal ball here, I would do a lot of things different to kind of see what was going on in the future. But what everybody is saying, and matter of fact, the Fed chair, Jerome Powell, actually talked today, and they're still forecasting 2 rate cuts this year. So that is what they're still saying. They haven't pulled back for that, and that has been the projection since the beginning of the year. So they're still holding true to that, and the inflation numbers are coming down and supporting that. So I still think that is where we're heading.
Okay, well, sounds good, and I don't disagree with you. I know that there's been, as a real estate agent, I work with sellers and buyers, and I've had some of the sellers that have been like, "Oh, we're just going to wait," and there's a kind of a consequence to that. But we'll get to that in just a little bit later. So one of the things I was going to talk about, so because the rates kind of got up into the mid 7s, right, and they've dropped down. What is the current rate today? Have you looked it up today?
I have looked, and they rate depending on the loan program and depending on obviously a lot of borrower qualifications.
Right.
They can range anywhere from government loans are right around the 6.5 rate
to
investment properties up to mid 7s. So there is a range there,
and
it depends on a lot of different factors, but that is a good range for you to base things on.
Okay. All right. So what I've seen with the rates where they are right now is, and I'm going to talk about the market just a little bit. There have been those buyers that said 6 months, 8 months ago, hey, I think I'm just going to wait. They are starting to come on out, which is, it's a good thing because guess what else has happened? Our inventory has increased and increased and increased. When inventory increases and increases, guess what else happens? The days on market that our sellers are sitting out there waiting for that buyer to come pick me is also increasing. So it's so very important that you have a strategic plan of how you're going to put your home on the market right now and price it right.
Absolutely.
So are you feeling that as well on the mortgage end? More applications coming in?
Well, yeah. So in the last few weeks, the last month or so, I mean, obviously in any typical mortgage cycle, this is the time of year when people look to make a change. School has ended. If you have families, they have time to be able to focus on that for their family. And we have seen an increase in mortgage applications. And you're right. People have been waiting, and they keep saying and pushing it out that we're going to wait for rates to come down. And they really haven't. So people are learning to adjust and work within the environment that we have, because there are some really good properties out there with inventory being up. So I am seeing some adjustment to that.
Yes, speaking of good properties, I actually have a fantastic
I'm sure you
property
do.
that's brand new construction in the Hickson area. And I mean, if you've been out there wanting a brand new house, you need your 3 bedrooms, your 2 baths, under right under 1,900 square feet, you could get that for $392,000. So, you are seeing that the home prices are pretty much staying steady.
Absolutely.
And so now is the perfect time for sellers and buyers to both engage and see where we can, make it a win-win for both parties, in my opinion.
Yeah, absolutely. And I would say too, there's a lot of renters these days that have been on the fence. And what I can tell renters is that your rent payment is 100% interest.
Oh,
you're
yes.
paying somebody else. So
That's right.
when you look at it in terms of that, today's the day to start building equity for yourself.
Right.
And get into a property why there's options and there's inventory and there's room for negotiation. Are you seeing that?
I am seeing that. And I'll comment on that a little bit too. So, let's say they get in today and they buy a $350,000 house. Well, we know that the home prices increase, right?
Absolutely.
And let's say a year from now, year and a half, that the rate goes from the 6.5%, and they bought that home for $350, and they can refinance that loan, and it's now at 6.25% or even 6%, maybe. I mean, think about how much equity that they've gained, right? And as their home price has gone up, and then they can refinance the rate and put more money back in their pocket.
Put more money back in their pocket. They can get rid, depending on what they purchased at and how much they put down, they could get rid of the private mortgage insurance just because that they've gained value. And then in the time that they've owned the home, there's a lot of things that can happen with time when you own a home. And most of them are good things. So that's why we encourage people that, it's always a good day to start building equity.
Well, and so they need to come talk to us and just let them know how to do that.
Yes.
And that is true story. I had a closing, I want to say it was just not even 2 months ago. And it was just a single young woman, and very smart, starting off. She bought her first home. I'd say she was probably 26, 27 years old. And from what she was paying rent versus what she could get a mortgage, she was putting not only equity in her house, but that much more money back in her own pocket that she was giving to a landlord.
Right.
So
we see that
it's happening
all the time.
It is
all
happening.
The time.
Yeah. Well, one other thing, I've got a little list here that I kind of wanted to go over. So we've kind of discussed this. Yes, is it better to wait for rates to drop or buy now or refinance later? Well, our answer is buy now and refinance later.
Absolutely.
if they drop, because we don't have our crystal ball.
I wish
right?
we did.
So, okay, how can sellers use some of the lender credits that you guys offer or rate buy downs to attract more buyers, since inventory has grown? And I'm not going to say it's a buyer's market, because it's not yet. My opinion, we have a level market when we have 6 months supply of inventory. We're not quite there yet. But, how can sellers use lender credits to rate buy downs and stuff like that, that's going to benefit a buyer to choose that seller possibly over another seller?
Okay. So with us, when sellers are willing to give seller credit or money towards the buyer's purchase of their home, there's several things that the buyers can do with that money. The first is they can use that money to keep money in their own pocket, because the seller's money is paying for some of their closing costs, which there are costs associated. So they're keeping more money in their pocket, and they can choose to build wealth with that money they're saving instead of investing it in fees for closing the loan.
Okay.
They can also do what is known, there are programs called buy downs, where you can buy down the rate and kind of ease yourself into a higher payment if you've been used to less. There is a 1-0 buy down, a 2-1 buy down, even a 3-2-1 buy down, which essentially is just like it sounds. The seller is funding a separate escrow account that you see on your mortgage statement to the first year. And it's, for example, a 2-1 buy down. If you lock in an interest rate of a 6.5, just for talking purposes, the first year on a 2-1 buy down, your rate would be a 4.5.
Okay.
So for 12 months, your mortgage payment would be based off the 4.5% interest rate, and that money in that extra escrow account would be added to it, would sit there and add to it. And then the 13th month, it would adjust to a 5.5, and then for the next year, your mortgage payment would be based off the 5.5% rate. And then once you get to that final 24-month period, it's locked in at the 6.5 rate forever until you choose to refinance.
Right.
If
Okay.
rates come down before you get to that, one good thing about a 2-1 buy down or a buy down in general is that money is sitting in an escrow account. So if you want to refinance before that time period is up and before you've used all that money, you don't lose that money.
Oh,
You can
fantastic.
apply
Okay.
that to principal at
Oh my
closing.
goodness.
So
And we
you're
all know
not
what that
losing,
does.
yes, so you're not losing that money that the seller was willing to give you if you're able to refinance before it's all gone.
Wow.
If you buy down the rate permanently at closing and spend that same amount of money it would take for a buy down, then when you come to refinance, if you haven't recouped that money in savings, you've lost the money.
You've lost it.
You've lost it. So it's a really good option. The key is for the buy down that the seller does have to pay for it. The buyer can't pay for it, so you would have to negotiate up front and talk to your lender about that. And I'd love to help you with that.
Okay, fantastic.
Mhm.
Well, she knows her stuff, no doubt, no doubt. So, okay, you've explained how the 2-1 buy down works, and I will say, we'll jump back kind of off the mortgage bus for a second onto the real estate bus. I have seen a lot more seller concessions,
Absolutely.
and that being because we're at, I think we were 3,200 and some homes
Right.
just this week. And so I have gotten people under contract where not only are we getting some assistance in closing costs, we are willing to, the sellers are willing to also do the buy downs. And then I've even seen where sellers that have been on market 60 plus days, they're even negotiating a little, a lower purchase price.
Right.
If they've been sitting out there 60 plus days, they've been overpriced.
Right.
Let's just be honest. They're overpriced and they're chasing the market downward. And so most of their offers are going to come in a lot lower. And it's just a reality that sets in with the seller at that point that maybe I should have been right here to begin with.
You got to do something about it to make it.
Well, hopefully they do something about it long before 60
yes,
days.
I would hope so.
As a real estate agent would tell you, you need to do something within 5 to 10 days if you haven't gotten a lot of activity. Okay, you said also that you've got some options. One of the things, of course, we know that if you are going to start looking for a home, the very first thing you've got to do is talk to one of these people here,
Yes.
Allison, preferably.
Yes.
And then Allison and I can get together to see where you need to be. But what's changed recently as far as underwriting guidelines? Any in-house guidelines? Anything changed with that?
There's a lot more in-house programs that people, with the market being such as it is and the rates have stayed where they are, they're making adjustments for people to be able to still afford homes.
Okay.
So, for example, and every year they do this, FHA has raised their loan limit. Conventional loans and banks and mortgage brokers are making programs where you can get 100% loans because money is tight. As you know, I mean, money is tight.
Right.
And 100% loans where you can get into a home with minimum money down. And still be able to start building equity by purchasing instead of just giving all to rent.
Right.
So I'm seeing a lot more flexibility from mortgage lenders, from banks, as far as what programs they offer so that they can help people achieve their dreams of home ownership, even with some of the challenges we're seeing in the market.
We're seeing in the market. That's fantastic. And you had mentioned that you do have a 100%.
We do.
So tell me a little bit about that.
So we have a in-house loan program. It's called our Home Rise 100, and it is essentially a conventional loan with no private mortgage insurance.
Wow.
Which is a pretty big deal.
That is a huge deal for your payment.
Yes, for your payment, with really competitive rates that allows you to get into a home with no down payment if you qualify for the program. And then, you still have the ability, or Wendi has the ability to negotiate on your behalf for the seller to pay for some or all of your closing costs so that, you could get into a home, with very minimal cash. So it makes some options and affordability closer for people than it ever has been before.
I love it. I love it. Hey, we are always here to make the dream come true for our folks. Yes. That's the main reason that we do what we do. It's all about, the clients and what's the best fit for them. Whether it could be that it's the best time for you to just wait and not even sell your house, or that's what we would honestly tell you. Or if now's the time, you've got to know all the facts, you've got to have all the data, you've got to be led, in
You got to ask the questions.
the right information. You got to ask the questions.
Mm-hmm.
If you guys have any questions for us, we would love to answer those questions for you, provide all the information that you need to make the best decision for you or your family. You can contact Allison if you've got some mortgage questions. And Allison, how do they contact you?
You can contact me by phone at 423-598-6843, or you can email me at allison.mayne@banksouthern.com. We'll put that in the comments so that you have it if you can't remember it by listening.
Fantastic. And as always, you can reach me at 423-718-1350. Wendi Stott with Keller Williams, and thank you for being with us here today.